Greg, what do you think about Detroit? Pro, cons, yay, nay? What do we think?
Yeah, it's a yay, but again, it's a long-term thing. Before I get into that, I have to say we have to start pretending to end the segment and then keeping the show going so people can hear what madness goes on in between segments on the show. So we've done Detroit before, and what was interesting about Detroit was it was maybe the only really nerve-wracking market in the country for me for a lot of years, because there was this combination of job exodus with the auto industry, with political corruption, that was really, it made it feel as if maybe the market had gone too far and it had too far to come back. So we made a change in our recommendation. We went from being basically a sell or just a hold forever to a buy, because they cleaned up the political the political corruption, cleaned it up, went through a bankruptcy, so dealt with their debt issues. And then that was a good enough right there because the prices were so low, because it hadn't appreciated in 20 years or more, like forever, that the yields were high, because the rents do wind up going up over time, even if the values don't go up. So it wound up being a very high yielding market. But you weren't going to expect to get much appreciation. Then the auto industry began coming back. Okay, so when the new administration came in, and I think a fair way to put it is they muscled, bribed with tax cuts, influenced with tariff threats, companies to come back to this country, manufacturing companies, that a lot of announcements got made very quickly of companies expanding and opening plants in Detroit. So that was a really good bit of news. We like Detroit because we feel like if basically a flat market that hasn't appreciated at all in 20 years begins to get any kind of lift, now you still have the high yield, and you have with it a high percentage of appreciation, because when the average house is $50,000, having it go up, $5,000 in value is a 10% increase. It can be very, very large from the standpoint of the appreciation percentage, right? Now, if you do a search right now, it's important to point out that there was an announcement in the last week. There was an announcement of another company going in and adding jobs in Detroit, opening up a plant and adding, I think it was 450 workers. But there was also an announcement that GM is doing a restructuring.
That's right.
Cutting 14,000 jobs across plants all over Michigan, Ohio, Maryland, Ontario. And so you got to pay close attention, right? So it always goes back to the same thing. If you went into Detroit, and if you're going into Detroit, I don't think it's a bad idea, but it's a 20-year deal.
That's right.
Like if you went in and you were planning on getting out in like 24 months, and there's a lot of investors out there that they have these short-term thresholds, which just don't work very well in real estate. It's too risky, because you were betting on the auto industry coming in, and it is, but there's also a segment of the auto industry that's actually going out. So it's not all rose-colored news here, right? And you might be freaking out saying, I was trying to see if I could double my money in 2 years. And my answer would be,
there's no way.
You did the wrong strategy. Yeah,
That's
it still
right.
may happen. It still may happen. Okay, the job growth may outpace the job cuts. If you go deeper into the story, by the way, what you see is that it has to do with changing the workforce, because they're investing more in electric and autonomous vehicles. So a lot of research being done, a lot of money being spent manufacturing a new kind of car that the workforce they didn't, I guess, feel was adaptable to the new kind of cars. They're going to be hiring more people, so they're letting some people go and hiring other people, right? So it's in flux. And if you had at least a 10-year threshold, you're going to win in Detroit. Okay, but if you had a 2-year threshold, this might freak you out.
That's right.
And if you have a strategy, and this is what it comes down to, if you have a strategy in real estate investing that it is possible for a headline to freak you out, the only headline is like nuke drops, right? But like any other headline about plants opening, plants closing, if you picked a good city that's on the rise in general, short-term blips like this wouldn't cause you any concern, because you can ride them out.
I totally agree. I mean, this is really no stranger to Detroit. I mean, you saw it back in the mid 2000s. Auto industry took a really big hit, recovered. And specifically what GM is doing right now, they're restructuring the cars that they're producing. So they're getting rid of the Chevy Cruze. They're getting rid of the plug-in hybrid, the Chevy Volt. And so essentially they're making $3 billion to $3.8 billion in changes in order to generate $6 billion in positive cash flow by 2021. I think the other challenge that a lot of these automakers are having is they have an aging population of management. And so they also don't have a whole lot of younger folks in essentially climbing the corporate ranks as quickly as they need to. So that's another challenge that the auto industry may be facing later down the road. So that's something else to keep an eye on. But like you're saying, Greg, if you have a city that has lift, this kind of stuff will happen anytime.
Yeah,
but
I mean,
the
this story
foundation of the
basically-
city is what you need to be paying attention to.
Yeah, and that's what makes picking winners being geared around the market being the winner and then the property being the instrument through which you take a position in the winning market, right? That's what makes it so important. That's, by the way, why I have so much fun with this. And that's why I want people that listen to our stuff to think about it as, hey, if you have common sense, this is an asset class you can play very well. You begin to look at where people live, where people are moving to, why are they moving there? Does that make sense that it will continue? So Detroit, it's a low-priced market, so you're going to get a great yield. You want to buy something cheap that has a chance of popping, right? You want to buy a market that's cheap, that has a chance of popping. Detroit is definitely one of those, and I believe it's going to. And like the other story is Fiat Chrysler opening a plant. That's the one that has the 400 employees going in. You're going to see these. This is an indicator of a company, General Motors, that was bloated and needed to make a shift in their workforce, and a bunch of markets around the country are suffering some job losses as a result. It is not a story of mass exodus of the manufacturing economy leaving the city. Okay? Big difference. So a lot of people, like the story that I read, it talked about people being like, oh, it's like deja vu all over again. And I get that. If you're losing your job, it's deja vu all over again. But if you're investing in the city, understand it's not the same thing. When the American automakers bankrupted themselves and a city bankrupted itself because of obligations it made over decades, that situation had to get remedied. Mm-hmm. And this move by GM feels a little bit like when Detroit went through bankruptcy and cleaned its books and started out with a fresh slate. These layoffs may be necessary for General Motors to thrive in the future.
That's right.
And so it could be like I would dig into it deeper, but it feels to me like, okay, they're taking a bullet right now. They're doing it at a time when other people are investing, so they need to invest. They got to make smart decisions, even if they're painful. Hopefully the people that are being displaced are able to find work quickly because of the new jobs coming in. But if I have a 10 or 20-year threshold for Detroit, I liked seeing the city clean up its act. I like seeing the big employers make some of those hard decisions that might be necessary to make their books better also.
And I think that's also something, like you said, to pay attention to. If these companies are just shedding the fat and cutting the fat only from a numbers perspective and not rebuilding, then that's a different story. But it seems like they are putting their energies and putting their investment dollars into the future, which in this case is electric and a better type of car potentially. So that's something else that we definitely have to be paying attention to. That's why I like some of these smaller cities, right? You take a look at what you and I talked about, I think, a little while ago, which was Huntsville, Alabama. They have a lot of good things going on there, Birmingham and Montgomery as well. So take a look at some of these cities and understand that it's not a short-term strategy. You need a long-term window here, 10, 15, 20 years to really play. Greg, then as we finish up the show here, if I'm, say, in my 50s and 60s, and let's say that investing for a period of 20 years doesn't make a whole lot of sense, what should my strategy be?
I think buying classically blue chip markets is the right move. Okay, when you're in that age bracket, you just don't want to lose any of your principal, and so the places that you can't lose, okay, and of course you always can, but you can't.
Yeah.
Unless something catastrophic happens, if you pick a market like any of the major metros in the Southeast, Charlotte, Dallas, Nashville, Orlando, places that have such unmistakable long-term population growth to start with. And all the migration and movement into those places is only getting stronger. And then just go buy a nice, perfect condition house that you can rent out for a profit. Just take the lowest risk strategy possible. Mm-hmm. Unless you want to risk it. If you want to get out and start doing the flipping thing, more power to you. But if you're doing this thing because you want to park money that's going to grow, buy perfect houses.
Yeah, I would also say, listen, if you're in your 60s, don't stress yourself out and try to flip properties, right? Like, it just doesn't make any sense. But like Greg says, more power to you. I mean, sure. Like, I couldn't imagine in my 60s flipping properties. No way. Thanks, Realty Radio. That's the show. Greg, thanks so much. Always a pleasure.
Thank you.